All right. Good evening, everybody. This is the January 2021 meeting of Triangle Association of Freelancers. My name is Don Vaughn, and I hope all of you had a wonderful holiday.
It's a reminder.
Alexa, cancel. Sorry.
That's okay. We have two special guests with us this evening. Lisa Tomey and Hans Zonnefeld have agreed to talk to us this evening about tax and business issues for freelance writers. So I'm going to turn this over to them. Hans and Lisa, it's yours. Take us away.
All right, thank you. Let me go ahead and get my screen share. Be just one moment.
Do you want us to mute and close our pictures?
That might be helpful. Thank you. Anytime now, screen. There we go. It's coming. All right. All right, welcome. This is Tax Information for Freelancers, presented by Hans Zonnefeld and myself. One second, I'm having technical issues. There we go. We're basically going to just give an overview about some tax information for 2020 and 21, some of the changes. It's not comprehensive, just a broad overview. And a lot of the things that we'll be covering are based on questions that y'all were so kind to give to us ahead of time. So, so a lot of this is based on that. Now, we do need to give a disclaimer. This is simply information. It is not meant to take the place of a tax professional. It's always a good idea to speak to someone who is a tax professional if you have any intricate situations that would require a little bit more expertise than you might have by a general tax program. Hans is a CPA at Lindsay & Gardner CPAs, PLLC, has a BS from Guilford College and MS from Appalachian State University, and he specializes in small and closely held businesses. It's kind of a passion of his to work with small businesses. I'm a freelance writer, poet, and artist.
Lisa? Lisa?
I think we lost them.
I think we may have. Lisa, can you hear us?
So you probably should get in the habit to record transactions as you go and bring up your books and keep up your books each week and make sure that you don't miss anything. Plus, some of the deductions are required to be kept contemporaneously. So I guess we go ready to the next slide.
Okay.
As a freelancer, you're required to pay federal and state estimated tax payments. So you need to keep track of your income so that you can make your timely estimated tax payments. Estimated tax payments are 4 times a year: April 15, June 15, September 15, and January 15 of the following year. If you don't make them timely, you will be subject perhaps to an underpayment penalty plus interest. I have here a couple tax tables for single taxpayers for 2020 and 2021, merit filing joint tax tables for 2020 and 21, so merit filing separately 2020 and 2021, and head of households. These tables you can kind of use to estimate your quarterly estimated tax payments. You take the income, what you expect, and your deductions, and use and annualize that what you expect for the year, and then divide your estimates up in four quarterly estimated tax payments, and each quarter you update that information.
That's easy to do on the IRS website. It's pretty, really super easy. And these tables are available on irs.gov.
As a W-2 employee, you have an employer share and an employee share of Social Security and Medicare taxes. As a freelancer, you basically pay both halves. So that is 14.4 for Social Security wages on the base of 137,700 for 2020 and 142,800 for 2021. The Medicare wages is for self-employed people is 2.9 for each part on all the income. Like I said, self-employed people pay both shares. In addition, for high income wages, Congress a few years ago came up with an additional 0.9% of wages and self-employment income to be assessed as additional Medicare taxes. For married persons, they have that at $250,000. Self-employment taxes are computed on Schedule SE. One half of the Social Security and Medicare taxes are deducted as an adjustment to gross income, so you do not have to itemize to get this deduction. The North Carolina rate is 5.25, regardless of filing status. The standard deduction for 2020, it's $24,800 for a joint return, $12,400 for a single person, and $18,650 for head of household. There is an additional $1,300 if you are blind or over age 65. For dependents, the standard deduction is the higher of $1,100 or $350 plus the earned income, and it can never be more than the single standard deduction. The 2017 Tax Act repealed the phase out of itemized deductions for high income taxpayers, but to make up for it, they also repealed the miscellaneous itemized deductions. Thus, it kind of eliminated a lot of deductions for tax preparation fees, job search expenses, investment fees, and employee business expenses. When I refer to job search expenses for W-2 workers. And employee business expenses, once again, I'm referring to the employees of W-2 workers. They all have eliminated these miscellaneous itemized deductions. Royalties for writers and freelancers are considered trade or business income. There have been several court cases where they attempted to characterize some of the royalties in part as capital gain treatment and therefore a lower rate, but the tax court nixed basically all those cases. One thing that is very important is that you need to qualify for a business and not a hobby. If it is considered a hobby, you get to include all the income but no deductions. So it is very important to establish that you have a business. That is done by having a business plan, keeping books and records, contracts for making contacts for publishing and self-publishing, intend to make a profit, making contacts with other writers for guidance, and contracts with publishers. One of the most popular deductions is the 20% business income deduction. It's the lesser of the 20% business income. So income after all these your expenses, or taxable income less qualified dividends and capital gains. That's the short and long of it. There are I can talk on this topic about 4 hours, but this basic rule captures approximately 95% of all small businesses. Health insurance premiums, including Medicare premiums deducted from your Social Security checks, are deducted as an adjustment to gross income, limited to your net business income. Once again, you do not have to itemize to get this deduction. Health insurance is very expensive, and a lot of people have gone with high deductible plans. Congress recognized this and have set up and allowed contributions to a health savings account to which you can contribute money to each year, and are allowed a deduction for it as an adjustment to gross income. You don't have to itemize. It's for self-coverage is $3,550, family coverage $7,100. If you're age 55 or older, until age 65, you're allowed to make an additional $1,000 contribution. You can contribute as late as April 15 of the following year to get a deduction for the previous year. So for 2020, you can make a contribution all the way till April 15 of 2001 for last year's taxes. One new item for 2020 is the 300 charitable contribution for 2020. It's 300 for single persons and 300 for married couples. It needs to be cash contributions, cannot be to a private foundation or a donor advised fund. These are available as a non-itemized deduction. If you have more, then you have to itemize for those. But the big thing is, for suppose that you make a payment to your church or another non-profit organization, and in return you get a ad to place in the bulletin or publication. Well, that rather than a charitable contribution to the charity or church, it is properly classified as advertising. Advertising would be more beneficial as it reduces self-employment income, thus in turn reducing your self-employment tax. There are a couple different retirement plans available for self-employed people. One is the traditional IRA, a SEP, a simple IRA, and a 401k. With these, you can make a contribution during the year and get a deduction for it. And it will grow tax deferred through your life. And then when you retire, you withdraw from it, and then you pick it up as income. In contrast, there are also a Roth IRA and a Roth 401k. You do not get a current deduction for it, but it still goes tax deferred. And when you take it out, it is not reported as income. So the key is kind of guesstimating what your income tax rates are now and in the future. So if you are in a high income bracket currently, and in self-employment, in retirement age, you are in a low bracket, you want to take the deduction for it. So then you want to stick with a traditional, a SEP or a simple IRA or a 401k plan. In contrast, if it is the other way around, low tax rates this year, but high tax rates in retirement, then you want to do the Roth IRA and the Roth 401k. I think it is a very guesstimate at best, because I cannot even predict the income tax rate out 4 or 5 years, let alone 20 years. If you do better than me. High school teachers get a $250 deduction as adjustment to gross income for school supplies, including COVID protective equipment and supplies. They've done this to keep the teachers safe in this COVID environment. PPP forgiveness is not in income, nor do you have to reduce the expenses by the PPP by the latest Income Tax Act. There are two simplified methods for applying for forgiveness. One is for the 50,000 PPP loan, and the other one is for the $150,000 or less PPP loan. Normally fixtures and equipment and software you write off over the length of the over a couple of different years, but Congress has allowed to write off some of the things of in the current year. Section 179, that deduction is limited to your trade or business income and basically covers about $1 million of expenses if you have $1 million of profit. Bonus depreciation, you can get a write-off equipment and software and fixtures off by using 100% bonus depreciation for 2020 and 2021. Also, there is a per item $2,500 de minimis rule for which a formal election on the return is required. And by doing that, each individual item, $2,500 or less, you can write off on your taxes on your Schedule C. Some of the software costs that qualify for the aforementioned rules include application as Scrivener, Word programs, publishing, editing programs, Adobe, PowerPoint, Office 65, etc. Like that. Your computer and monitors and scanners are also qualifying equipment. Expenses for traveling expenses. Mileage for 2020 is 57.5 cents. And for 2021, 56 cents per mile because of lower gas prices compared to last year. You need to keep a contemporaneous record keeping for vehicle expenses. The mileage rate is probably the easiest way to keep track of it, because then you don't have to keep track of all your individual car receipts and keeping total mileage and business mileage, and this way you only have to keep track of business mileage. Parking and tolls is in addition to the mileage rate. Rental vehicles used for business travel are 100% deductible. Lodging for business purposes is deductible. Business meals are deductible at 50% for 2020. Business meals bought at the restaurant for carry out and dine in are covered at 100%. They're trying to get more business for restaurants under these COVID conditions. Office supplies, internet, phone, mobile, and office. For your mobile phones, a lot of people use their mobile phone as an authentication factor to log into your cloud application. Insurance, you want to make sure that your business equipment is covered. If you have a renter's policy and or homeowner's policy, it is not automatically included in that policy. You probably have to add a rider. I know I had to add a rider to our renter's policy to make sure that our business equipment, including equipment of my employer, is covered. So you need to contact your insurance agent and have a discussion to make sure that everything is covered. Some of the professional dues for writers and authors that are deductible: Artists Guild, TAF, Sisters in Crime, Romance Writers, NCWN, NCPS, ACES, etc. Your subscriptions to Writers Digest and other professional publications used in your business are also deductible, as well as books and material. Registration, business names are also deductible on your Schedule C. Educational expenses such as workshops, webinars are deductible to the extent does it not qualify for a new profession. For example, I'm a CPA. I go to law school and take the bar exam and pass the bar exam, and now I can qualify to practice law, even though I'm not changing my profession and work as a CPA. And the law degree would help me in my CPA work, in doing taxes. I cannot deduct that because the law degree and law will qualify for me to practice as an additional practice area that I currently cannot do. It's a different profession. However, if you do qualify, then you can do books, materials, and registration fees. For example, one that is deductible to writers is the TAF Right Now conference. One of the most popular home office expenses methods, and most very popular and are the two methods of taking home business expenses. One is the simplified method, which is $5 per square feet up to 300 square feet. So that is a max of $1,500, or actual expenses, which is computed as follows: rent, mortgage, interest, property taxes, utilities, home maintenance and supplies, repairs, HOA dues, homeowners insurance, mortgage insurance, and you add those all up and multiply that by the fraction of your total home office space compared to the total square feet of your home. Usually the actual home office expense deduction is more than the simplified method. If you have, and let me back up, the home office expense deduction is limited to the tentative income on Schedule C. If it is more, then that carries over to the following year if you use the actual method. If you use the simplified method, you cannot carry over the unused portion to the following year. So therefore, I recommend, most, that you use the actual method, because while it takes more record keeping, it allows for taking more deductions and carry over to the following year if you have a bad year in the current year. There are various ways of keeping records, which may be kept by paper or electronic. Some of the formats that you can use is QuickBooks or similar software, Quicken, Excel spreadsheet, the shoebox method of throwing everything in a box and organize it at year end. I do not recommend it, and I certainly do not recommend it to give it to your CPA to doing that, because that would take additional time and accordingly a higher bill for you. Or pay someone to manage all your records throughout the year. How long do you need to keep records? Lindsay and Gardner have made available a complimentary retention guide. Certain records you keep for 1 year, other years records for 3 years, and additional records for 6 years, and and some forever, and special circumstances records. For business or for personal records, you have the same situation: 1 year, 3 years, 6 year, and forever, and circumstantial records.
It's gonna catch up.
If you have educational expenses for which do not qualify for your business, then you still may be able to get a deduction, but not as a business deduction. Some of them are the higher tuition expense deduction, which expires at the end of 2020, so it's not valid for 2021. The Work Opportunity Tax Credit, the Life Learning Credit, Cloverdale Educational Savings Accounts, and Qualified Tuition Programs, commonly known as 529 plans. I have charts shown what is deductible for each type of credit or deduction. For example, for the American Opportunity Tax Credit, tuition and fees is deductible, and so is book and supplies and equipment. But for 529 plan, it also covers room and board. The American Opportunity Credit is for the first 4 years of college. The Lifetime Learning Credit is maybe for if you go back to school for a graduate degree or taking classes at a community college or technical college, you know, to learn new skills. Traditionally, the American Opportunity Tax Credit and the Lifetime Learning Credit have different phase outs. But IRS or Congress, I should say, have made it a little bit simpler by, for 2001, making the phase out tables for those two credits the same, rather than a lower one for the Lifetime Learning Credit. I think it's part that some people have been unfortunate and lost their jobs and now taking advantage of the by going to school to learn new skills, and therefore trying to help them out by giving them a tax credit for trying to do that and learning new skills and etc. Most of for the American Opportunity Tax Credit, you have to attend to an eligible tuition, and you need to be at least half-time student on the half-time basis student. There is still a interest on deduction for education loans. The max is $2,500. It phases out, as you see on the table. Only you can claim it, not the dependent. And it interacts with the American Opportunity Tax Credit and the Lifetime Learning Credit, in that the loan proceeds can be used for those credits, and you can still get, on top of that, get the interest deduction. Go to the next one. I kind of opened the floor open to the for questions, and maybe you have some questions or questions that I did not answer. So at this time, I'm ready for questions.
Guys, thank you so much. This was wonderful. I know Mike has been keeping an eye on people who had questions. So Mike?
Yeah, so there is 3 of them. The first one is, can you share the slides with us after the meeting?
Yes.
Okay. Okay, the next question was, I never paid quarterly in all the years I've been an independent. Is it okay to just file it annually?
You are supposed to file quarterly estimated payments. You may expose yourself to underpayment penalties and interest. So, so you hold on to your money, but you expose yourself to penalties and interest, and neither one of those are deductible. So it might be better off you should pay them quarterly.
Okay. And then the last question that I have that was collected was about medical insurance deductions. Are those deductible? And what about Part A, Part B supplemental, and dental?
Yeah, okay. As a self-employment, you can take a health insurance deduction. It includes health insurance, Medicare A and B, and dental.
Okay. I have a question.
Nancy?
As of last year, my husband always worked full-time and I was doing the 1099s. I did have a job with a W-2 this year, but he's now retired and I'm hoping not to have to work outside, in a job. I want to keep doing the writing. I'm a romance writer. So he's not having anything taken out. I'm not having anything taken out. So my CPA always let it slide because he was having it taken out and we filed together. So he always had taxes taken out of every paycheck. So that covered mine, supposedly. This year, is it enough that I just have Social Security withhold like 10%?
Yeah, you can withhold federal and state on your Social Security.
Okay.
It gets a little bit, I probably would make estimated tax payments rather than withholdings on your Social Security taxes, but yes, you can do that.
Okay, because my income was very low from the 1099s this year. That's why I got away from that publisher. Doing
Yeah,
some publishing
by
now.
making estimated tax payments, you can see how you are doing throughout the year, so you can up and down it as
That's true,
needed.
yeah, because I did it once.
If you are Social Security,
yeah.
it's an X percentage of your Social Security check, and it probably is a lot of trouble to get the government to change the percentage each quarter for you.
They really are. You can do 7, 10, 12, or 15, and then it took like 1 month to get it to stop because I didn't realize.
Yeah, so that's why I say it's a whole lot easier. You may want to put maybe whenever you receive income, a portion aside into your savings, active, and don't look at it. Kind of figure out that you don't have it, and when estimated tax payment time comes, you take that money and make a estimated tax payment.
I do use a CPA, and he's not steered me wrong yet. So I just want to look forward to this year not having to do the 9 to 5. It was fun for a few months. That was it. Got those ballots all scanned.
Does anyone else have any questions?
For 9 to 12 hours. That was horrible.
Rebecca?
So I came a little late. I'm sorry if you've already covered this, but how are you supposed to estimate what your earnings will be if you're a freelancer and or a writer and you have no idea what projects you're going to get or what your book sales are going to be?
So what I would do is, at the end of whenever an estimated tax payment is due, I add up all my income, subtract out all my taxes. I make a best estimate what I make out for the next quarter or the next remaining of the year, and then go to the tables and then use the tables to calculate it. And then the following quarter, you do the same. You go first quarter, second quarter, you add all those expenses, income up, add all the expenses up, come up with a net figure, and take in consideration your standard deduction and multiply it out, subtract what you have already done or paid for the first quarter, and that will be your second quarter. Third quarter is similar. You add up all your 3 quarters of income and expenses, subtract out your standard deduction, and other deductions that you may have, and multiplied by the tax tables, you know, after consideration what you expect for the fourth quarter, subtract out what you have all previously have paid in, and that be it. So you kind of do an ongoing quarterly guesstimation of income. So that should get it relatively easy, or relative, as probably as close as you get. That's
So
that's the,
sorry.
there's no magic. There's no magic. There's no magic. You don't. The one thing that you can do is base it off the previous year, but you know, if your income goes up and down, you don't want to necessarily do it. Do the 100% safe harbor rule, which is paying in as much as last year. So therefore I recommend, especially if your income is sporadic or uneven throughout the year, that you keep records so that you can calculate it and each quarter and adjust it each quarter. That's probably the best way to do it.
So then are you paying for the 3 months that just happened, or the 3 months that are coming up?
Just happened.
Oh, I see. Okay.
So for the first quarterly payment is due on April 15. So I would add up all those three quarters, 3 months of the quarter up, of your past 3 quarters.
Okay.
3 months.
Excuse me, 3 months. Yeah,
So
3 months.
So you call it an estimate, but you're not actually estimating what's coming up in the 3 months. You're okay.
You're doing the current year for actual, and then predicting out the next 3 months. And then at the second quarter, you add up all your income for the 6 months up, and then expect what you expect for the next 6 months for the end of the year. So calculate it out how much it is, subtract out your first quarterly estimated that you have already made, and that will be your second payment.
So if you were to say on the first quarter, say you estimated that your income was going to be at this level and it wound up being a lot lower, you can adjust for that, and then the next quarter
you can adjust. Yeah, that's correct.
Yeah, there have been some years where the first quarter I may have done really well, and then the next quarter did really lousy, and I'll have enough, residual from the first quarter that I won't even have to really make a second quarter payment because I won't have enough to have to qualify it.
Yeah.
But using the tax tables and keeping a the idea of where your money is, your income and outgo, you have a pretty good idea of what you got to work with.
Yeah.
Also, maybe you can consult your CPA. Like our firm has a B&A income tax planner, and we can make accurate calculations. What it should be, we have actual calculator. It's called the B&A income tax planner. It's very sophisticated, and you can do quite a bit of projection in scenarios on that.
Hans, is there a specific amount a writer needs to make annually in order to be considered a professional? And is there how much income should you get before you need to start paying taxes?
I guess once you start making more than your standard deduction, but for income tax purposes, but not for self-employment income taxes, because for all your self-employment income is subject to SE deduction, and for that you do not get any deduction for, so that you will have always, you may have no income tax liability, but you may have a self-employment income tax liability. Those are two different tax calculations.
Okay. Anybody else have questions for Hans? Some of you have your video muted, so if you're raising your hand, I can't see you. Just speak up if you do. Let me put it that way.
Hans, I'm wondering if you can talk a little bit more about the PPP loans, and if you think that writers may qualify.
PPP loans?
Mhm.
For the first round of PPP for most people have expired. You can, for PP loans for the second period, if you have been for riders, if your income has been less than 20% compared to the previous period, then, or excuse me, if I rephrase that, I have to, let me rephrase that. If your gross receipts are less, are reduced by 20% or more, then you can qualify for a second round of PPP.
But
That's one rule. Or
can,
if you have been completely shut down or partially shut down by the government, but I don't think that will be applicable to riders. That would be more applicable to salons, hair salons, and and restaurants and bars and stuff and gyms.
yeah. If a writer can show that his business has been dramatically impacted by, COVID, I think they can possibly be eligible. Correct.
Maybe by a significant loss of markets, for example, magazines that have gone out of business,
Right.
loss of client.
Yeah. The odd thing about the application is you really don't have to say it was COVID related, but that if you don't get this loan, your business is in trouble, is basically what you're saying. And if you didn't do the first round, you don't have to prove the 25% reduction in income. But if you're trying to get it for a second round, then you do. But if anybody's seen, a drop that they feel is attributed to COVID, like Don was saying, if maybe some markets dried up for you, you may have the potential to get that loan. And I say loan, but if you spend it the right way, it can be considered a grant from the government and all be forgiven. So it's something for some people to think about, maybe.
Any other
Question?
questions?
There was one that just came in. When retaining documents, do you have to keep the hard copy or can you just keep electronic copies, i.e. scanned in copies?
Did we lose Hans?
Oh, no.
Hans? We
He
may
had
have-
a pretty bad connection,
Oh.
that's for sure.
Okay, Vera, is this a question you can answer? Vera also is an accountant.
Yeah.
Okay.
Oh, I'm sorry, and Teresa also, so.
Yeah.
Good question when you do. Yeah.
I like to keep hard copy and electronic copies, but I'm kind of anal about that. I'm not sure exactly what the IRS requires. I think an electronic copy would probably be fine.
And Teresa, can you add to that?
I would agree with that. Electronic copy, be sure that it's clear. Sometimes that can even be better than one of these paper copies that the ink fades off of it. So I do think electronic, if you can read it and be able to print it out, would be sufficient for the IRS.
So,
And I'm also going to give my 2 cents about retirement. Most Americans are woefully underfunded for their retirement.
we are.
You
And
think?
if you have some options as a self-employed person to put money away, actually in more generous ways than sometimes if you're participating in a retirement plan with an employer. Okay, so I would look into that. For some of us that writing is
Bye.
a passion, and maybe our spouse or significant other is the one bringing in the bucks to pay the bills. Maybe you take your writing income and you use that to start funding some retirement, and it will reduce your taxable income and obviously hopefully prepare you better for retirement. Because it's ridiculous how little people are saving for their retirement. And with the average age, you know, being in the 80s that you're going to live for, you need that money for a long time. Social Security alone ain't going to cut it.
Very good.
So,
Lisa, do you, any additional thoughts on what Vera
Yes.
just said?
Oh, sorry.
Oh, I
question.
absolutely agree with that. There are a lot of very inexpensive ways in which you can start saving for retirement, low cost, you know, whether it's an IRA or a simple IRA versus the full-blown 401k, which the administrative costs can get very expensive. So absolutely, just start chipping away at it.
and it's a nice deduction. I mean, it can be a
Yeah,
big,
it's great. And it's for, now Hans would probably also say this, and I think he's coming back on and I'll step off, but if you have not applied for the PPP, either first round or second round, I encourage you to call your bank. The bank is where you get in to get the loans. And hopefully you have a good relationship with a banker. If not, some banks like Fidelity are taking new clients and are doing a wonderful job hand-holding and working with people applying for first round and second round. So I encourage you to do that, to talk to your tax advisor and talk to your banker about that. And now Hans is back.
Hans is back. We're
Don't
sorry
step
we missed
away.
you there for a second, Hans.
Yeah, we had some, for some reason, had some froze up, but you do, I heard what you said, Teresa, and I agree with you. You could talk to your banker. That's the easiest way to do it, and talk to your CPA.
yeah. Some banks don't, like my daughter's credit union is not doing PPP loans. So you might have to go to like an online lender or something like that.
Yeah,
And
maybe
look-
your community bank, maybe your community bank, those are more friendly than maybe or are more equipped than a credit union. You know, I think they're trying to do it more towards small businesses. So your bigger banks probably still are going to favor maybe their bigger customers, but I think they got a lot of flack from Congress that they help big businesses, but not small. So I think they're going to reach out and help small businesses and small, you know, and common people a little bit more now the second time around.
Nancy, did you have an additional question?
Yes. Am I going to be taxed on the stimulus money that my husband and I received?
Your stimulus check is not taxable.
It's already
And
in the chimney.
you do not have to pay it back. You do not.
It's already in the
and
leaking chimney. It's gone.
If you receive the max on both rounds, and you do a recalculation, and for some reason it lines up to be that you were technically allowed to less, you do not have to repay that either. You can get more, depending if you did not get the max, and you do a recalculation on 2020 taxes returns, then you can potentially get a little bit more, depending on if your income was lower this year, or I would say for 2020 then compared to 2019. What you got this year was kind of what they call an advance payment.
But I have a sister that was earning decent and she had to quit her job early October. And of course, they're going by 2019. So
Yeah.
yeah, she made more than Social Security. She has to pay more, things like that. So I had to get her on Social Security. So
Joel, do you have a question?
Yeah, and this is something we haven't covered. A friend of mine is a freelance artist, went through a nasty divorce, and he, of course, had been working at home. He'd been working at home for 20 years. And so the house had to be sold, and he had to pay something like $25,000 for something called recaptured depreciation.
Yep.
Is this something that happens only if you have had a home office or had it for a long time?
If you take depreciation on your home, then you know, normally your first $500,000 of the gain on your sale of your home for a married couple is excludable, and $250,000 for single persons. But if you have took depreciation on your home for your home office, then the amount of gain, the amount of depreciation taken to the extent of the gain is recaptured into income. So yeah, there could be situations where you could recapture some of the gain
Okay.
and
Any,
recapture part of the depreciation.
any other questions for our accountants this evening? Sue?
No, I just wanted to make a comment. Guys, stop worrying about retirement. We're all gonna live in a commune together. And
And TAF needs to buy an island.
I mean, hell in a handbasket. We're all in this together, okay? Just chill.
So before we move on, any additional questions? We've got 2 CPAs and an accountant with us this evening. Lois, do you have a question? You're muted, by the way. There you go.
This is kind of off topic, but do you recommend setting up an LLC?
For an
If you're a
LLC,
freelance writer.
For your writing business?
for your writing, it protects you potentially from liability purposes. If it is a single member LLC, you don't save any taxes. You still be paying income taxes and self-employment taxes. LLC can make an S election, and then to the extent that some of your earnings are exceeding reasonable compensation, that part of the income would not be subject to SE income, but you do need to take out a salary out of your out of your LLC or S corp if you make that election. So an LLC can make an S election, and then you have to pay yourself a salary. So
Complicated.
I'm not sure if, and it is an additional tax return, so I'm not sure if it would be beneficial and cost effective, because you're talking about keeping a second set of books, another tax return, and that tax return flowing into your own tax return. So it's relatively easy for us to do, but but you still have to, and then you have payroll returns to do as well. So you need to talk about substantial amount of money before you start doing that, because it needs to be cost effective, and because otherwise you may save a little bit, but then you have additional cost of doing that too. So it needs to be cost effective, the cost versus the benefit of analysis to be done.
Vera?
To Hans's point, one of the benefits of an LLC is that they can't come take your house if you write something and quote somebody and they say, I didn't say that, and they sue you for $1 gazillion. That's one of the concerns.
Yeah, I'm not an attorney.
Yeah.
I know they have more legal liability protection.
Right.
But as to what, I'm not.
Yeah.
I don't have a law degree, and I don't have a law license, so I keep my license to a general observation that I know. And that as a general rule that I have more protection. But then if you have specific questions, you need to talk to your business attorney about that rather than me.
Yeah, what I was going to suggest is that you might consider looking at some kind of business insurance, like an errors and omissions policy, so that if you are caught making an error or somebody sues you, that insurance will act as your, barrier to someone taking your house and your kids and everything.
let me note too, though, that if you were writing for a publication and you make some kind of an error that results in a lawsuit, almost always you are on your own, and likely will not be supported financially or legally by the publication. They're probably going to tell you, this is your fault, you have to deal with it.
Yeah. Policies are pretty inexpensive too. So,
Yeah, I got a comment as well.
If you do a lot of writing that potentially could put you in legal jeopardy, you write about politics or you write about things that are controversial, that might be something to consider. But if you're just writing cozy mysteries, you probably don't need to set up an LLC or even get business insurance, as Vera was talking about. Does that sound accurate, Vera? And Hans?
yeah, I mean, if you're writing nonfiction and maybe, like I said, interviewing people, quoting them.
Not in my case.
No, okay.
Yeah, I got a comment about that as well. And that is basically, it just creates more paperwork for you. And if you screw up in any fashion in keeping your paperwork for an LLC or S Corp, then you lose your legal protection. It's called piercing the corporate shield.
Right.
And for S Corps and LLCs, if you're just one person, et cetera, it's real easy for lawyers to get past that. So it's not really worth it in terms of if you are worried about them taking your house or whatever. It just basically, unless you're going to make $150,000 a year or more, I wouldn't even consider it.
That sounds about right. Any additional questions from anybody for Hans or for Teresa? All right. I can't thank you guys enough. This is really valuable information. Thank you so very much for doing this for us this evening. Hans said that they're going to share the slides, so I'll make sure that those are made available.
We'll share the slides through the portal.
Yeah, and we have a document too that has all the links to everything we talked about tonight.
Okay, perfect. Perfect.
Yeah.
And Teresa, thank you also for joining us. You're technically Hans's boss, is that correct?
I just signed the checks. I just signed the checks.
We
That's
really
all there is to
appreciate
it.
you joining us tonight, and your contributions to this conversation was really important. I want to thank you for doing
Well,
that.
thank you for letting me
and sharing-
join it.
sharing your-
I tried to cover for you, Hans, best I could when you were gone for a few minutes. Hope I didn't mess it up too bad.
We got one.
Thank you, guys.
One thing I need to do, as you all know, we changed our bylaws so that we are not doing biannual elections for board members. We have set an established board for consistency, and as members leave for whatever reason, new members will be brought in and approved, brought in through the membership and approved by the membership. But every January at our January meeting, I want to review, this will take 30 seconds, just review who our board of directors are and their official titles. Our executive director is Maya Spikes. Our managing director is Mark Cantrell. Our administrative director is Rebecca Dalton. Our financial director is myself, Don Vaughn. Our public relations director is Christy Stevenson, and our membership director is Hannah Weisenberg. So that is your board of directors currently. As noted, if anybody needs to step down for whatever reason, their replacement will come from within our general membership. So this is just something we'll do every year. And with that out of the way, does anyone would like to conclude with good news? So let me ask, does anyone have any good news to share? Any sales or anything cool got going on? Just raise your hand, because
I just want to share that that's the first time anyone has listed off a board of directors, and I've known every single person on it.
we have a really good board. I am very, very happy with this group of individuals. Everybody is very dedicated to the organization, and we're all working very, very hard to make sure that TAF grows and flourishes. So yeah, we've got a great board, and I'd like to keep them. So any good news? Anybody got, Sandra?
Can you just send us a list with those titles you were reading so fast?
Oh, sure. It's also on our website. If you
Okay.
go, yeah, if you go to, forget what it says, TAF documents, I think, it lists our bylaws, and it also lists our board of directors. If you can't find it, just email me personally, and I will be happy to send it to you.
Thank you.
Sure. Anybody? Joel, what you got going on?
Well, aside from selling a 32-foot long 12-foot high stainless steel sculpture recently,
All
which
right.
is which has kind of helped out. Anyway, I've been working on a book called War with Paraguay, War with Paraguay and How to Sit in a Hoop Skirt. And I figured out how to actually navigate through the Library of Congress newspaper collection, which is a feat in and of itself. But if you can get into their time machine, you will find that everything you thought you knew about history is probably wildly distorted. Has anybody ever recalled learning about our war with Paraguay?
Mm-mm.
1858, quarter of the U.S. Navy, 2,500 American troops to leave Buenos Aires, sail 1,900 miles up the Parana River with no notes, no maps, to encounter an enemy they don't know how many there are, and they got no maps of the country. It was fortunately settled before it came to that. So anybody who's got some information, some old newspapers from the period 1848 to 1868,
Yeah.
I'd love to see them. It's sparked by the fact that I did an article I sold last year to Walter magazine called Raleigh Before the Storm, and it's about Raleigh and just on the verge of the Civil War. And reading the papers from the time was a revelation and very startling. And not just for the ads for morning after pills, I might add, or for 4-minute ice cream freezers. But if somebody comes across some info, some of the original info, I'm not so much interested in journals because that's a private person's take on something. I'm interested in what did the average person in the public know at the time something happened. And that gives you a completely different perspective than historians have, with the benefit of hindsight and analysis and knowing stuff that was secret then.
That's a pretty cool idea, Joel, and I'm glad you're able to tap into the Library of Congress. We forget that that's a resource available to all.
And if you need to learn how to sit in a hoop skirt, actually I knew that before because my mother was a theater costumer. But the other question is it sanitary for women to wear underwear? I want to think about that. That was some of the stuff you just like War with Paraguay and whether it's sanitary for women to wear underwear. Practically all women wear corsets, oftentimes to bed, and actually it's considered at the time hoop skirts and corsets were considered progress for women, making it much easier for them to dress.
Interesting. Does anyone else have any good news to share? Oh, Drew? You're muted.
I just wanted to invite you all to the Carolina Book and Writers Conference. It's our 5th annual. We are doing it online. If you're interested in going, look up carolinabwc.com. You can get a half-price ticket if you use either Karin 21 or Drew as your discount code. It is the 13th and 14th of February. We have the Poet Laureate of North Carolina as one of our keynote speakers, and also a 13-year NBA veteran who has retired, who writes books, both children's books and books for athletes. We have 8 different panels. It's a 2-day process, a 2-day session, and with your the price of admission, you'll have access to the videos for a year. So
what's the website again?
It's it's Carolina BWC.
BWC.
Yeah, BWC.com.
Drew, make sure you send a notice to TAF through the listserv too with all that information so everyone will know.
Will do.
Yeah, make sure you share that. And along those same lines, as you noted, we've decided this year not to hold a Right Now conference for a variety of reasons. And instead of that, what we're offering are going to be 6 really exciting TAF talks over the course of the year, as well as some great monthly meeting presenters. Our first TAF talk will be on February 23rd, and that is with stand-up comic Gary Gulman. And I am very excited about that. That is going to be a lot of fun. I interviewed Gary for Writer's Digest. He's an awesome guy, a wonderful writer, very intriguing background, and I think it's going to be a lot of fun. And we also have presenters set for February. It's going to be a novelist, Lisa Lorello, and her husband and collaborator, Craig, I forget what Craig's Lancaster. And our March guest will be Christy Murphy, who's a friend of mine living in California, who has done very, very well writing and self-publishing cozy mysteries and other books. So I asked her to join us, and she's going to talk about her process and her different avenues of marketing and some other information along those lines. So I'll be sending out that information later on. So before we conclude, any additional good news? Anybody? Sue?
Thank you, guys. Very quickly, because I know you want to go sleep. I was involved in Pit Mad, which is Pitch Madness on Twitter. I know Twitter makes my head hurt. Long story short, I got a publisher interested in my book, and I sent it off to him in December. City Limits Publishing in Nashville. And they were supposed to get back to me on December 23rd. Christmas came and went. I called them in early January. I said, hi. And I actually spoke to the actual publisher. And he said, we're really sorry. We're in Nashville. Any light bulbs going off? The bomb blew out our office.
Oh, no.
All the windows, all their communications.
Oh.
Can you believe that?
Oh, no.
Yeah. So they had my first 5 chapters. They were very interested in my manuscript. I sent the rest of it. It's being reviewed now. And it's Nancy Badger. I think Nancy has signed off, but I contacted her at one point and she goes, well, it's about time. I know people go on and on. I'll be really quick. I was involved with NYC Midnight, and they have these contests, and during the pandemic it sort of gets me out of my head. They give you a prompt, they give you a short period of time, and I get it done. It's been a lifesaver for me. And I came in 2nd place in the first round, which was fabulous for me. And I wrote it in the perspective. It's 250 words. It was flash fiction, 250 words. I wrote it in the voice of a slave. My niece wrote back saying, how dare you write in the voice of a Black woman? I mean, what do you do in your fiction? You're writing from a man, you're writing, you know what I mean? You're going all over the place. And she said, any prize money you win, you should give over to the Black causes. And I'm like, oh man. And it went on from there. I see every time I seem to write fiction, I seem to piss somebody off. So I'm just sharing that with people.
Well, first of all, good luck with your book.
Thank you.
I'm so sorry to hear what happened to your potential publisher.
No, they're
Hopefully
cool. They're cool now.
that's
But
great. And also congratulations on 2nd place in that competition. That is an accomplishment.
Thank you, honey.
Super cool. Super
Couple
cool.
thousand people competing. So
There you
I'm
go.
very happy.
That's awesome.
Yeah.
So anybody else? All righty then, folks, thank you so much. This was a great meeting. Hans and Lisa, thank you again. And everyone else as well, Vera, for sharing your thoughts too. This was a great meeting, and I guess that's it. So I'll let you all go, and we'll see you next month. You have a great one. Take care.
Thank you.